How do you know when it's on and when it's off? No, I know that part, but is there a color?
Green is on, red is off.
No, it doesn't change. So you have to watch what you say. Testing. Good morning, ladies and gentlemen. My name is Charlie Johnston, chairman of the company, and as such, I'll be chairman of this meeting today. On behalf of the board of directors, I'm happy to welcome you back in person to the 2022 annual general meeting of the shareholders of Jamaica Producers Group Limited. It's nice to be back face to face. Shareholders, it has been a long 2 years for all of us, 2.5 years, I think, as we have tried to navigate the COVID-19 pandemic. It is truly a pleasure to have you back here with us in person. As you know, we are also live streaming this meeting via our website, and I would like to extend a special welcome to our shareholders and friends who are watching this meeting online. I would like to remind our members who are here in person to continue to be mindful of our meeting, health and safety protocols. And we ask that you make full use of the sanitizing station located at the entrance of the meeting room, and that you wear a mask if you feel you need to. At this time, I'd like to introduce our company secretary and group general counsel, Mrs. Simone Pearson, and ask that she confirm that the required quorum of 15 members present in person or by proxy has been met.
I confirm that we have a quorum.
Thank you. I now call this meeting to order and invite Ms. Summer Clark from JP Corporate to open in prayer.
Thank you. Good morning. Let us pray. Dear Heavenly Father, as we gather here today, we ask for your guidance and wisdom so that we may come to a full understanding of the matters at hand. Enrich our minds so that our discussions may be fruitful, furthering our drive to excel with integrity and renewing our commitment to reaching higher and farther together. In your name we pray. Amen.
Thank you, Ms. Clark. Ladies and gentlemen, the accounts and the reports of the directors and auditors have been circulated previously to all members. I would now like to introduce Mr. Nigel Chambers of KPMG, the company's auditors, and I ask him to read the auditor's report, which may be found on pages 50 to 59 of the annual report. Immediately following this, I will introduce the board and management team, and we will then receive a report from your Chief Executive Officer. Nigel.
Thank you, Chair, and morning, shareholders, directors, ladies and gentlemen. The auditor's report starts on page 52 of the annual report, and I will read from the report as is customary.
Sorry, Nigel, left mine up there.
So you can read along. So, report on the audit of the consolidated financial statements. We have audited the consolidated financial statements of Jamaica Producers Group Limited, the company, and its subsidiaries, collectively the group, set out on pages 60 to 117, which comprise the group balance sheet as at December 31, 2021, the group's statements of profit or loss, statements of profit and loss and other comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising significant accounting policies and other explanatory information. In our opinion, the accompanying consolidated financial statements give a true and fair view of the financial position of the group as at December 31, 2021, and of its financial performance and cash flows for the year then ended, in accordance with International Financial Reporting Standards, or IFRS, and the Jamaican Companies Act. We conducted our audit in accordance with International Standards on Auditing, or ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statements section of our audit report. We are independent of the company in accordance with the International Ethics Standards Board for Accountants, International Code of Ethics for Professional Accountants, including International Independent Standards, for short, the ISBA Code, and we have fulfilled our other ethical responsibilities in accordance with the ISBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matters are those that, in our professional judgment, were of most significance in the audit of the consolidated financial statements of the current period. These matters were addressed in the context of our audit of the financial statements as a whole and in informing our opinion thereon. We do not provide a separate opinion on these matters. There are three of them, which I will take in turn. First is impairment of goodwill and intangible assets. The carrying value of the group's goodwill and intangible assets may not be recoverable due to changes in the business and economic environment in which the specific subsidiaries operate. These factors create inherent uncertainty in forecasting and require significant judgment in estimating and discounting future cash flows that support the assessment of recoverability. Further information is in notes 3K and 13 of the financial statements. Our audit procedures in response included the following: testing the appropriateness of the group's forecast and discounted cash flows, using our own valuation specialists to evaluate the assumptions and methodologies used by management, comparing the group's assumptions to externally derived data, as well as our own assessments of key inputs such as projected economic growth, competition, cost inflation, and discount rates, as well as performing sensitivity analysis on the assumptions. And lastly, assessing the adequacy of the group's disclosures about the assumptions and the sensitivity of impairment assessments to changes in key assumptions. Second point is on the measurement of pension and other post-retirement benefits. A subsidiary operates a defined benefit retirement scheme and provides other unfunded retirement benefits. Significant estimates are made in valuing the group's employee benefits assets and obligations. Given the value of the assets and liabilities, small changes in the assumptions can give a material financial impact on the group. The key assumptions involved in calculating employee benefit assets and obligations are discount rates, inflation, future increases in salaries, and pensions. Management appointed an external actuarial expert to assist in measuring the employee benefits assets and obligations at the reporting date, and the use of significant assumptions increases the risk that material estimates can be materially misstated. In response, we evaluated the independence and objectivity of the appointed actuarial expert, determined that the actuarial valuation was performed in accordance with the requirements of IAS 19 employee benefits. Using our own actuarial specialists, we evaluated the assumptions and methodologies used by management's expert, testing employee benefit data provided by management to the actuarial expert, assessing key assumptions used by the actuary, including inflation and discount rates, and by comparing them to information from independent sources, confirming a selection of the plan assets with the custodians of the assets, and recomputing their fair values by reference to independent prices and yield curves. And lastly, assessing whether disclosures in the financial statements are appropriate in respect of the group's employee benefit arrangements. The third key audit matter relates to accounting for investments in associate and joint ventures during the year. The group acquired shareholdings in 3 equity accounted investees during the year, as detailed in Note 10 of the financial statements. The classification and measurement of these investments involves significant judgment having regard to the group's ability to control or significantly influence the relevant activities, which are the significant operating and financing decisions of the investee entities through board representation, shareholder agreements, commercial relationships, and other relevant factors. The group is also required to determine the fair value of the net assets acquired and the goodwill arising on each acquisition in accordance with IFRS 11, joint arrangements, and IFRS 12, disclosure of interests in other entities. The determination of fair values involves judgment in the application of fair value analysis, including projected cash flows and discount rates reflecting the business risk and capital structure. These measurements, being subject to significant judgment, are therefore subject to higher risk of error. There's more information in notes 3A and 10 of the financial statements. In performing the audit in respect of this matter, we did the following. Examine the terms of the terms of the purchase and shareholders' agreements for each investment to determine that the rights acquired over each investee were appropriately assessed by management as conferring joint control or significant influence. Involved our own valuation specialists in challenging the valuation methodologies and assumptions used by management's valuation experts to identify and measure the net assets, including intangible assets. Tested the mathematical accuracy of the calculations, including cash flow projections performed by management and management's expert, which formed the basis of accounting measurements for the transactions, and evaluated the adequacy of the disclosures in respect of the acquisitions and the assumptions involved in the measurement of net assets acquired in transactions, as well as uncertainties involved in the estimates made at the reporting date. Other information. Management is responsible for the other information, which comprises the information in the company's annual report for the year ended December 31, 2021, but does not include the financial statements and our auditor's report thereon. The annual report is expected to be made available to us after the date of the auditor's report. So remember, this is at the date of writing the report. Obviously, the annual report is here. Our opinion on the financial statements does not cover the other information, and we do not express on any form of assurance conclusion thereon. In connection with our audit of the financial statements, our responsibility is to read the other information when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude there's a material misstatement therein, we are required to communicate the matter to those charged with governance. Management is responsible for the preparation of the financial statements that give a true and fair view in accordance with IFRS and the Jamaican Companies Act, and for such internal control as management determines is necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error. In preparing the financial statements, management is responsible for assessing the company's ability to continue as a going concern, disclosing as applicable matters related to going concern, and using the going concern basis of accounting unless management either intends to liquidate the company or to cease operations or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group's financial reporting process. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if individually or in the aggregate they could reasonably be expected to influence the economic decisions of users taken on the basis of these financial statements. A further description of our responsibilities for the audit of the financial statements is included in the appendix to this auditor's report, which is on pages 58 to 59. And secondly, report on additional matters as required by the Jamaican Companies Act. We've obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been maintained so far as appears from our examination of those records, and the financial statements which are in agreement therewith give the information required by the Jamaican Companies Act in the manner required. And the engagement partner on the audit resulting in this independent auditor's report is Nigel Chambers, signed KPMG Chartered Accountants, March 1, 2022. On page 58 to 59, there's an appendix that kind of sets out the auditor's responsibilities, and I'll try and read through that quickly as well. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatement of the financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud or error is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Secondly, we obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cast significant doubt on the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the company to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the financial statements, including the disclosures, and whether the financial statements represent the underlying transactions and events in a manner that achieves fair presentation. And lastly, obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statements. We are responsible for the direction, supervision, and performance of the group audit, and we remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the plan, scope, and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identified during our audit. We also provide those charged with governance with a statement that we have complied with relevant ethical requirements regarding independence, and communicate with them any relationships or other matters that may reasonably be thought to bear on our independence, and where applicable, related safeguards. From the matters communicated with those charged with governance, we determined those matters that were of most significance in the audit of the financial statements of the current period and are therefore the key audit matters. We describe these matters in our audit report unless law or regulation precludes public disclosures about the matters, or where in extremely rare circumstances we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Thank you. Chair.
Thank you, Mr. Chambers. You know, I thought during COVID you'd have been able to have changed this rule that forces you to read this thing out, but we'll see. The notice convening the meeting, to be found in the annual report, has been circulated to members, and I now propose that we take this notice as having been read. I wish to inform you that the proxies to be exercised at the meeting must have been lodged with the company at least 48 hours before the meeting. We received 26 proxies representing 39% of the issued stock of the company. I also take the opportunity to remind you that the articles of the corporation and a copy of the minutes of the last AGM are available for viewing on our website. At this time, I'd like to reintroduce our directors. Firstly, Mr. Jeffrey Hall, who serves as Chief Executive Officer of your company. Next is Mr. Alan Buckland. Alan, you want to raise your hand and so everybody can see you. Also, our Group Finance Director, Mrs. Patricia Francis, Mrs. Sanya Goff, Mrs. Delia Kelly, Mrs. Kathleen Moss, Mr. Grantley Stevenson, and Professor Alvin Wint. Also, Dr. Marshall Hall is unable to be present here with us today, but I am certain that he's watching this meeting online. I'd also like to inform you that Mr. Donovan Perkins retired from the board of directors of JP at the end of 2021. And I'd like us to sincerely thank him for his more than 14 years of service to this group. Thank you, Donovan. Shareholders, I'd now like to also introduce the following officers of the company. And I will ask that those who are physically here in the room stand up when your name is called. From JP Corporate, Mr. David Martin, Portfolio Managing Director. Ms. Maya Walrond, Portfolio Managing Director. Ms. Antoinette Livingston, Portfolio Finance Director. Ms. Amilka Tame, Performance Manager. Mr. Andrew Wright, Group Treasurer. Mrs. Tanika White Groves, Corporate Financial Controller. From AL Hugesteger in Holland, they are not here, Mr. Edo Abels, Managing Director, and Mr. Marco Zoland, Deputy Managing Director and Financial Controller. From Tortuga International, Mr. Marcus Simmons, General Manager Tortuga, and Ms. Camille Lawson, Finance Business Partner, Tortuga. From JP Snacks Caribbean, Mr. Benjamin Valdez, General Manager, Mr. Frank Cesar, Finance Business Partner. From JP Farms, Mr. Mario Figueroa, General Manager, and Ms. Peter Gay York, Finance Business Partner. From Kingston Wharves Limited, Mr. Mark Williams, Chief Executive Officer, and Ms. Clover Moody, Group Financial Officer. From JP Shipping Services, and I do not believe they're here, but Mr. Gary Phillips, General Manager, Mr. John Davies, Financial Controller. From Geese Line, Mr. Peter Dixon, Managing Director, and Mr. Chris Roberts, Finance Director. From Grupo Alaska, Mr. Enrique Nabor, Chief Executive Officer, and Ms. Chrismel Gruyon, Chief Financial Officer. From Co-Beverage Lab, Mr. Arthur Marty, Director, and Ms. Christina Etero, Head of Administration. From Miami Freight and Shipping, Mrs. Juliana Keene, General Manager, and Mrs. Michelle Hines-Clark, Finance Business Partner. I think we've got everybody. Shareholders, your company has long been organized to generate revenues from both a diverse range of business lines and, importantly, a diverse range of markets. The 2021 performance of the company demonstrates that the group has emerged from the COVID-19 crisis with a stronger multinational business portfolio. We continue to believe that our strategy of maintaining diverse business lines, a diverse geographic footprint, and a flexible balance sheet will continue to serve our shareholders well in 2022 and beyond. I am pleased to inform you today that the workforce of JP is growing, and its growing list of associated companies numbers over 2,000 persons. I would like to thank each of them for their valuable contribution to the 2021 result. I also thank our customers for their continued loyalty and support, and our board and management for their counsel and leadership during the year. I now invite Mr. Jeffrey Hall to make a presentation on the performance for the year 2021 and the outlook for 2022. Jeffrey.
Thank you, Chairman. For those who, this may not be obvious, but I believe, and I could stand corrected from persons who watch the stock exchange closely, but I believe that Charlie Johnston is the longest serving chairman of a public company that's still in the role today. And we're going to talk about inflation and exchange rates and rising interest rates and war and commodity prices. But I think on behalf of the board, I can assure you that none of those things is going to make Charlie Johnston flinch. And we have a steady hand in this company. So I thank you for that. Our agenda today is 4 items. I'm going to share a bit about the group, its dimensions, lines of business, give you the financial highlights, share a bit about our strategy, and a bit about the way forward. So we view the group as having 3 core business platforms. The first platform is our logistics enterprise, a group of businesses that have a Caribbean nexus at their core, but a diverse group of businesses, both geographically and by type of service and level of infrastructure investment. The single largest part of that group, and we'll talk about it in more detail in a second, is Kingston Wharves, the multi-purpose, multi-user terminal and logistics operation here in Jamaica that serves not just Jamaica, but the world in the form of its transshipment business and logistics services. JP Shipping Services, based in the UK with offices in Wales and a warehouse facility, logistics center in London, is engaged in the freight forwarding and consolidation operations. Miami Freight and Shipping is the analog of that business that we recently acquired, based in Miami, serving the US market into Jamaica. JP Shipping Services serves the UK market into and out of almost every English language market in the Caribbean. And then last year we acquired Geese Line, and I'll talk a bit about that later in the presentation. The other business platform that has European operations is our fresh food and drink business. Centered in the Netherlands, Hogestegger, A.L. Hogestegger engaged in the production of fresh fruit juices for the European market. And Co-Beverage, based in Barcelona in Spain, handles the Southern European market for fresh juice. The third business platform at the core of JP, probably the most familiar to people in this room, is our specialty food and drink business. Again, that business has a Caribbean nexus. Production based in the Caribbean, but obviously serving international markets, as well as the Caribbean. The St. Mary's products, which I think you know well, in snacks and frozen food. Tortuga, rum-based baked goods, and now spirits-based baked goods. JP Tropical Foods, farming and fresh fruit operation here in Jamaica. And Alaska, our beachhead expansion into the Spanish language markets based in the Dominican Republic. So let me put some dimensions around those 3 core business platforms. Let's talk first about the revenues of the business. Our revenues are split roughly 50-50 geographically between the Americas, and by that I mean North America and the Caribbean, and Europe, on the other hand. By division, the largest share of our revenues is in the food and drink business, on a 60-40 split, with 40% of the revenues being in logistics and infrastructure. And then if you dig down into the food and drink revenues, by far, the largest share of the revenues of food and drink are in Europe, with 3/4 of the revenues of food and drink being the business of fresh fruit juice in Europe, an important part of what this group does. And it's important for shareholders to understand that business. Let's talk about our assets, because I think the assets help you to understand the earnings composition of the business, because obviously they drive the earnings potential of the group. So by assets, interestingly, the reverse is true. The largest share of the asset base of Jamaica Producers Group is right here in Kingston, with Kingston Wharves, which is the largest, I believe, the largest private landowner in the city, in the parish of Kingston. But not just land, it's equipment, it's the berths, it's the warehouses, and a minor share of our assets are in Europe. And by division, and by extension, 3/4 of our asset base is in the logistics business, with the remainder being in the food business. And that helps you to understand the earnings, because I think there may be some uncertainty about that. The earnings generated from the assets are roughly in line with the proportion of the asset base. So 88% of the assets, and I have to call out that last year was a COVID-affected year to some extent. And so that will change over time, but roughly in line with the asset base is a sense of the earnings potential of the businesses. People. The structure of JP, and it's important everybody understand this, is we operate as a holding company. And so by division, we have very few people, less than 1% in the center doing corporate work. And most of them are probably here today. Okay, so that's, and then we have a 60-40 split between the logistics and infrastructure group and the food and drink group, with over 2,000 employees, half of whom are in Jamaica, again, heavily centered in the logistics business, but the farms are still very labor intensive and still employ quite a few people, and I believe our farming operation is still the largest private employer in the parish of St. Mary. The remaining employees are split between the Dominican Republic, including our 50% interest in Alaska, which we'll talk about, and our snack business, and our European businesses, with the primary employee base being in the juice businesses in Spain and the Netherlands. But a strong employee base in the UK, in Geest and JP Shipping. All right, let's turn this into a financial perspective. What I want to do is just step back and look at the business over 10 years, because there's been quite a bit of transformation of the business, and I'll do it really quickly. What you care about, in part, shareholders' equity, 300% up over the last 10 years, 3 times. Driven by revenue growth, 400% in the last 10 years. And driving a return at the level of profits, and in this case, I'm talking about profits without any one-offs, 10 times growth in 10 years. So for those management team members present, we have to figure out how we're going to continue that for the next 10 years. All right. For the year-on-year comparison, I want to ask you to work with me to look at it year on year, but also pre-COVID, post-COVID. Because a number of companies will say we had a big growth in profits year on year relative to 2020, but 2020 needs to be normalized to deal with COVID because it would have been relatively down from an operating performance level. So internally, we've set ourselves a goal, and I've said it publicly, which is that we wanted to come out of COVID stronger than we went into it. And we did. So looking at revenue, relative to pre-COVID, up 17%, 19% in the year. But profit-wise, and I back out a one-off decision in 2020 to exit our real estate holdings interest in Sage and just talk operating performances. Relative to pre-COVID and post-COVID, profits up 53%. Part of that is revenue growth, about which we spoke, but obviously in order to get that result, we had to drive up the margins as well, and we did. So what does this mean for our ultimate financial position? Assets up 10%, cash up 22%, current ratio 3 times, meaning our current assets exceed our current liabilities by 2.8 times, and our debt to equity is 11%, meaning that our debt is 11% of our equity. So we have borrowing capacity at this time if we need it. What does it mean for you? The stock price growth is modest in a time in which stock prices, frankly, are under pressure because of rising interest rates and the expectation interest rates would continue to rise to tame inflation. So the point-to-point movement in the stock price is 5%, but that's for you to determine. What do we have control over? Return on equity, 10%. Growth in the equity base, 11%. Dividend growth, year on year, 25%. And again, let's do the 10-year retrospective. Dividends are up 750% over the 10-year window that we looked at. All right, how are we doing this and how will we continue to do it? So we mentioned that we have these 3 business platforms: logistics with a Caribbean nexus, fresh food and drink with a European nexus, and specialty food and drink with a Caribbean nexus. So those are the business platforms from which we intend to derive continued growth. But we do have 2 pillars, 2 strategic pillars, or modes of execution in relation to those business platforms. And we have to deploy both of them looking forward. An acquisition pillar and an innovation pillar. And by the innovation, I mean figuring out how we get into new markets and how we deploy new products. So I'm going to just share the highlights of that strategy in action in 2021. In Caribbean logistics, we acquired the Geese line, 50% of the Geese line in 2021, with the other 50% being acquired by our joint venture partner connected to Seatrade. The Geese line operates 5 reefer vessels, and those refrigerated vessels carry about 9,000 pallets and about 100 containers as well. And they commenced their journey in Flushing, in the Netherlands. Go to Portsmouth, bringing consumer goods, vehicles, project cargo, heavy equipment, you name it, and head on down to the Eastern Caribbean, Barbados, St. Lucia, St. Vincent, Grenada, Dominica, etc., and discharge that cargo. And then they go to Colombia and get fresh fruit. And then to Dominican Republic, Benjamin, in your neighborhood, and get more fresh fruit and head on back to Europe. It's a 60-year-old business with about 12 billion Jamaican dollars of revenues, a very significant operation. But I mentioned the word nexus because for us, what's important is the realization that the Caribbean is a trade-dependent region. So stuff is always moving into and out of this place. And what we want to do is to figure out how we can support that and obviously generate a click as things move in and out of the region, but ultimately to serve customers' needs. And so part of what we do is JP Shipping is figure out how we can support customers who want to move less than container loads of cargo. They want to get into the specifics and the details. So we acquired Miami Freight in January of this year, and Miami Freight does that business from the US into the Caribbean, into Jamaica. And we believe it's a growing market in part because of e-commerce. We believe that people are going to look online and not just identify light, small packages, but ask themselves, how can they buy a dining table? Or how can they buy plant and equipment? And how can they get it here efficiently and reliably? And that's a business that we think we understand because we've been doing it in the UK for generations through JP Shipping. And so during the year, not only did we pursue our acquisition strategy, but we pursued our innovation strategy with JP Shipping, looking at the environment in the UK, expanding its warehousing capabilities, expanding its software and systems capabilities so we can redeploy those elsewhere, and of course, expanding its trucking capabilities to deal with the well-known shortage of trucking capabilities in that jurisdiction. But I would say we're particularly proud in the logistics business of the steps made by Mark Williams and Clover Moody and their team at Kingston Wharves. They've made substantial investments in plant and equipment and are breaking ground now as we speak in a massive and important berth expansion and logistics facilities development. But they've also made innovations in process and technologies on the other end of that logistics chain to allow the cargo, when it gets to the Caribbean, to be cleared quickly and easily and digitally and allow for traceability and tracking and updates for their customers. You want to import something? We can do it. We can handle it. So we can bring the thing into the warehouse in the UK, we can put it on the ship, and we can get it off the ship in the Caribbean. And what we need to do is to network that. Food and drink. Again, two strategies for this platform. The acquisition strategy. You've heard me speak at this meeting before about our commitment to fresh juice. But obviously, one of the constraints with that commitment is that it has a relatively short shelf life. So you can't transport it long distances. It's refrigerated cargo. It's premium cargo. And so we've set about to deploy our acquisition capabilities to this business too. And during 2021, we acquired a 50% interest in a small but expanding fresh juice business in Barcelona, in Spain. And we believe that will create an opportunity, a platform opportunity to develop in fresh juice in Southern Europe to complement our capabilities in Northern Europe, which are well established, but still we believe have significant room for growth. And let me just talk about this business so you're clear about it. It's a very unique enterprise. We import or acquire locally in the Netherlands about 50,000 tons annually of fresh fruit. And that means that we're bringing in citrus from South Africa or Spain or Egypt. We're bringing in kiwis from New Zealand. We're bringing in berries from Poland. We're bringing in fruit from Chile, mangoes, you name it. Speaking about logistics, on time in order to squeeze it fresh and deliver it to large-scale supermarkets in the Netherlands, in Scandinavia, in Germany, in Belgium, in Czech Republic, in Northern Europe. So we have a strong commitment to fresh. But within that commitment to fresh, we're innovating. And one of the examples I'll share with you is a trend towards fresh, which means that we've had to invest in extraction lines and invest in presses and invest in capabilities to manage the hygiene of the environment. But at the level of the consumer, there's an expectation that it be fresh, but also functional. And so we're looking at organic. In fact, we launched a lactose-free vegan yogurt smoothie. People who are experiencing a sore throat and want a vitamin C kick. So we've launched shots with a high component of ginger. You have to buy ginger fresh. And carrots from the Netherlands. Summertime, people want a functional refresh, but still want the vitamin C. We launched a watermelon lemonade. Very innovative business at the cutting edge and growing. The other platform, the Caribbean food platform, we looked at that business, and obviously we originate in an English language market in the Caribbean, the largest English language market in the Caribbean. But as Charlie Johnston always says, that's not good enough. You've got to, if you want to be serious about being a Caribbean business, you can't pretend that the largest consumer markets in the Caribbean are just within the English language space. You've got to figure out how to engage in the Spanish language markets. And we took the challenge, made an acquisition with our joint venture partners, 50-50, of the leading ice business and water business in Santo Domingo, in the Dominican Republic, which is the largest Spanish language and the largest consumer market in the Caribbean. By population, obviously, Cuba is relevant, but it's not relevant as a market opportunity for us at this time. And so that gives us a platform with 100 trucks going into every supermarket chain, gas station, food service, that operates 2 factories, one in Santo Domingo and one in the fast-growing Punta Cana, Bávaro region that serves the tourist markets of the Dominican Republic. But back to the core, I mentioned tourist markets. At the level of innovation, again, we said we've got to branch out and get bigger. And our Tortuga business, which admittedly was hit because of COVID, because of the Caribbean arrivals being down. And that business, I think, deserves your commendation because they came back strong in 2021 and said to themselves with a bit of soul searching and head scratching, okay, the Caribbean tourism market is down, but there are other tourism markets. And we have to figure out how we're going to have a conversation with people who go to those other jurisdictions. And so they've launched, because there is a tourism market in Alaska, people actually go to cold places as well. And so they launched an Alaska birch syrup spirit cake. They've launched a Kentucky, not chicken, Kentucky bourbon cake. They've launched a Tennessee whiskey cake. And so we're saying that the tourists, wherever they are, can have an experience of provenance, of some connection to the jurisdiction that they visited, and we can find a way to have that conversation with them through innovation. Frankly, This year, 2022, we're going to have to figure out how we hold on to that Caribbean tourist again. And so we've made investments at Sangster Airport to meet them right there, have our own retail kiosk, same in Barbados, so that we can ensure that we bring back that Caribbean dynamism in what we hope will be what they call revenge tourism. So we're ready for that too, and we're not giving up on it. In our food and drink business, Caribbean Nexus, and this is, I'm really proud of the team there, Benjamin, and I really would hope you convey it to them because it's really special. This one is another head scratcher. They said to themselves, we're in the business of providing a convenient snack to Caribbean people with carbohydrates that they know and understand. So, for me, green bananas, check. Plantain, check. Cassava, check. Breadfruit, check. Team said, well, what about flour? I said, well, you can't give them flour. I said, yes, the Caribbean people do eat flour as a snack. It can be transformed into a snack and made convenient. And they said, oh, how? And they came up with a Johnny cake snack in a bag. So I think that's something special. And if you haven't tasted it, you need to. And it's an excellent innovation, I believe. But I bring it all back to where we started, which is the business of fresh produce. We're exporting again in our green banana business. We're expanding our farms by adding plantain. And we are also asserting ourselves in the community in which we do business. In St. Mary, by saying to ourselves, how can we express our values in that environment? Our commitment to people, to the environment, to integrity, to the community itself. This is true in all the businesses that we operate. But we do believe, and we want you to accept as shareholders, that there's something special about our connection to St. Mary, where we do have over 3,000 acres of land. So we've said to ourselves, how can we engage with it? And this is something that we want to do in a way that expands and becomes bigger and more important each year. And we want to take it seriously and execute well in line with our values. And I want to report to you that in 2021, we led a St. Mary vaccination drive, not just for our own teams, which across the world had an over 90% vaccination rate early on because of the work done to raise the profile, to bring in entertainers, to invite the Prime Minister, you can see in the pictures, but also to ensure that our community had the benefit of vaccines at our locations. We championed the tree planting initiative, reforestation. Already we've planted over 6,000 trees as part of this project, timber. We launched the St. Mary Education Trust in partnership with other St. Mary interests, including the Phillips family, to provide scholarships to high school students coming from St. Mary, but going to UE in Jamaica or elsewhere, and UTEC and CASE and other tertiary institutions. And most recently, and this has been given quite a bit of media attention, we looked at our land and sat down with the community, and like the case for many large landowners in Jamaica, at the margins of the land, you will have people who occupy the land. And there's clearly a tussle. And so we sat down and cut a deal and said, look, let's transfer the land to you, to a benevolent society in which we have a director and you have directors. Let's agree and write down and document and covenant on the land that this land is not going to be used for commercial services, not going to turn into a body shop or a nightclub or anything like that, but it's for residences that are going to be built in line with the building code. And we're going to support it and make it green and attractive and valuable to that community so they can borrow against it and develop it and have it for their families. And they said yes to that. And we signed a deal, and we're very proud of it. It's 87 families, 10 acres, 250 people, and I think it's going to make a difference to your land value as shareholders, because on the perimeters of your land are going to be people who care about the same values that we have. Our outlook. Just give you a quick update for Q1. Revenues continue to grow, up 26%. Gross profits, 25% up. Net profit, 42% up. Cash, 23% up year on year to 11.5 billion. Debt to equity, remember I said it was 11%, down to 10.5, and shareholders' equity growing by 12% year on year to $18.3 billion. None of that would have been possible without a management team, without genuine leaders who are out there every day doing the work of this company. And I thank them for their work to deliver that result. Thank you.
Jeffrey, thank you very much. That was a very exciting, and I think it deserves another round of applause. Yeah? So, at this time, I'm going to invite questions from the floor. And I'd like to remind shareholders to state their names for the record. I'd also like to say that I'd like to request you that you hold your comments plus 2 questions, and then let somebody else ask questions, and then come back. So comments plus 2 questions. And Mr. Stapler, I can see you have your hand up already, and you're off the mark. So comments plus 2 questions, and then we come back. Thank you.
Mr. Chair, good morning to you and your members of the board, fellow shareholders, employees, customers. Mr. Chair, with your permission.
Not everybody knows that you are who you are. So please tell us who you are and your shareholders. And your shareholder. Thank you.
With your permission, sir, Mr. Chair, I have some observation I would like to share before I ask my question. So with your permission, sir, I would like to look at those observations. First of all, we give God thanks for being with us over the year. And despite the pandemic has made us strong, and we invite his presence in our midst here today at this meeting. Mr. Chair, Charlie Johnson and Grant Stevenson are men who go back to the 70s.
And beyond.
Who, when they put their pen to a check, they will call and say they want this ship to be fed with fuel oil. So therefore, on Sunday, I had to leave my house, make sure those ships were well taken care of. And when you call Charlie or Grantley, the check will be ready. Man of integrity, man of character. And you continue to be those men today. And I hope we are learning from your experience, sir.
On behalf of Grantley, I thank you, sir.
Very good management discussion and analysis. It has opened our eyes to a lot of stuff that is happening at Jamaica Producers. Thank you very much for that management discussion and analysis. And hope that your MDO, Mr. Hall, who is doing a fantastic job, will continue to perform. The board evaluation was good, and that has opened our minds, our hearts, our desire to see those members of the board continue in their service, for their professionalism, for their expertise, which has helped this company to grow the way it has grown. And Mr. Chair, lastly, the auditor's presentation, very good. And we hope that next year we won't have the auditors standing reading the report, but that they will continue to work so that the Companies Act can be changed and that they will no longer be reading the report for us, basically, that we will have it and we'll accept it as it is. Mr. Chambers and the late, not the late, but the retired Pricewaterhouse chairman, they have promised that they will work hard to have the Companies Act changed so that this will take place. Mr. Chair, my questions. Turn with me to page 54. Explain why the use of significant assumption increases the risk that management estimate can be materially misstated. Page 54. Explain why the use of significant assumption increases the risk that management estimate can be materially misstated.
So, having praised Mr. Chambers, we now need to hear from him.
Yes, Mr. Staple. This is in relation to the employee benefits measurement. So, if you take measuring somebody's pension benefit from now to when they retire, there are several years sometimes in between. So let's say 20 years. And to measure the effect of, to measure the value of that obligation, you have to apply what we call a discount rate. A small change in the discount rate would create a big difference in the measurement number. So it's mainly because of the passage of time and the level of estimation that's involved in arriving at something that's going to be paid in 20 or so years' time. The assumptions that you use make a big difference.
Thank you very much, sir. Mr. Chair, turn me to page 61. Page 61.
With you.
Are you with me, sir?
With you.
In 2020, our total revenue, total, when I say total, I mean everything, total revenue was $23.3 billion. And that $23.3 billion cost us $19.5 billion, which gave us a profit of $3.7 billion in 2020. For every dollar, Mr. Chair, for every dollar, we spent 84 cents and we made 16 cents profit for every dollar in 2020. In 2021, our total revenue was $26.1 billion. And that $26.1 billion cost us $22.3 billion, giving us a profit of $3.8 billion. For every dollar in 2021, we spent 85 cents and gained 15 cents. Incrementally, Mr. Chair, that is, in 2021, when we reached the 2020 figure, those extra revenues that were earned was $2.9 billion. And that $2.9 billion cost us $2.8 billion, which gave us a profit of $82 million incrementally. For those incremental dollars, each dollar cost us 97 cents, and we made 3 cents profit. What accounted for this high expense incrementally in 2021?
Alan, I'm going to ask you to respond to that, please.
Hi, Mr.
Is
Is it on? Oh,
Go ahead.
hello, Mr. Staples. So I guess I'd address it with two responses. Firstly, just going through your, as you calculated the revenue for 2020, you've included the 1.8 billion one-off gain that we recognise from the sale of our investment in an associated company called Sage. And we wouldn't typically class that as revenue. because it's a one-time sale of a capital item. If you remove that, you'll see that the revenues have increased by 4 billion year on year, from 21 billion to 25 billion. But our cost base has increased, as you said, by 2.9 billion. So, obviously, a substantial part of our revenues have variable costs. If we sell one more bottle of juice, there's one more bottle, there's one more cap, and there's one more orange, apple, whatever it may be. So a certain proportion of our costs are variable. We'll never get away from that, and we would expect costs to go up. What was pleasing, and I think Jeffrey mentioned it in the presentation, is that we this year experienced a gross margin increase. So the gross margins that we get, which is the difference between the revenue we sell our products at and the variable costs, or the largely variable costs, our gross margins increased from 26% in 2020 to 28% in 2021. So I think that's where the pressure is in the current environment to maintain those margins. But I think we did a reasonable job in increasing them between 21 and 2020.
Thank you very much, sir. Mr. Chair, those are my two questions. I have other questions.
I know you
but
have
I will
others, sir.
come back.
Thank you for your tolerance, sir. Thank you.
Good morning, Mr. Chairman.
Morning,
Livingston Young.
Mr. Young. Welcome.
All right, you can turn to page 38. Just want to big up the board attendance.
You beginner, sir?
Yeah, so much attendance, Mr. Jeffrey Hall, Mr. Patrick Francis.
Mrs. Patricia.
Yeah, Mrs. Patricia Francis. Mr. Hall again, Marshall Hall. And let me see again. Devon Patrick.
Donovan Perkins.
Yes. Donovan Perchick. Yeah, Percy. Perkins. Yeah, Perkins. Yeah, me just the attendance, director attendance. Yeah, just here for bigging up, attend the meeting.
Good.
Yeah. You can turn to. Well, look at it's coming. Just give me a minute there. Just last it with. Just give me a look at time. All right, anyway. Go to page 97.
9-7.
Yeah, 97. Note 17D. Other retirement benefit. All right, you jump down to the bottom part. Yeah. All right. Impact on post-employee observation.
On post-employment.
Yeah, employment.
Right.
Observation. Changes in 2021, 2020. 0.5%, 0.5% alone. That's 2021 now. As you name it. In firm salary increase, medical discount rate, firm medical cost rate. Explain.
Future medical cost.
Yeah, future, right, that's right. Explain to me 2021 alone. Do we look at explanation of 1,723,000?
The discount rate? Alan, you want to get this?
The first one is a firm salary increase.
Or you'd like the,
Yeah.
I can tell you.
Chair.
So,
Life on this rate of firm salary increase.
Okay, sir, we're going to get an explanation of what this...
So, Mr. Young, what this note is describing is one of our post-employment retirement benefits that exist in the Kingston Wharves business is a health and life insurance that extends to individuals beyond the time that they're employed by us. This particular note sets out the value, this particular note at the bottom shows what the impact for Kingston Wharves and JP will be for a change in certain assumptions that are judgments. This actually goes back to Mr. Staple's first question, which is material significant judgments. This note is giving an indication of what the impact will be on the company if the discount rate were to increase or decrease by 0.5%, and or the assumption around future salary increases by or decreases by 0.5%.
Yeah, that's 2021, a decrease. Explain to me, come on, have an understanding. Suppose me there are your company for 10 years, and it happen that's why me get fired. And me have $1 million worth of the insurance, right? Suppose, as we said, me get fired, I will leave the work. Or you get back your money, I just blow up, so.
You mean the pension?
Yeah, and the pension. I just blow up like that. Can I get fired from the work?
Well,
It depends on the terms of your employment, sir. And you know, I don't know that, I think you're entitled to your money, but it depends on what you got fired for, etc.
No, it's not based upon the fire, man.
No, you said fire.
Yes. But
All
me
right.
say it's not mostly like that matter the money. If you have $1 million dollar in it and it just, we do that money there. It go back to you or what?
Sorry, go ahead.
It go back to the company?
So the way it works, Mr. Young, is, and I don't know if you're asking for personal advice or just in case of...
Yeah, me just ask a question.
You have to vest. These benefits have to vest. And that means you have to be an employee in good standing for a certain length of time. Yeah. And in the case of the post-retirement benefits, you have to retire in good standing. In relation to the pension, when you reach retirement age, it's with you if you retire. But obviously, there's an expectation that it must vest, first of all, to work for a company for a long enough period, and then for certain benefits, you must retire in good standing.
But there are certain companies, see?
But Mr. Young, let me just say something. The questions that you need to ask are about this company's business.
Yeah.
We can talk to you afterwards about.
All right. I just something to want.
Okay. So please go on to a second question on the company's business.
All right. I just want to know. Can't be that about certain company when I did, but is that right? Turn to page 110. Age of great rise, growth right,
age categories.
Yeah, age, right, age category. All right, current net post due 0.31%, past due 0 minus 30 days.
0 to 30 days.
Yeah, 0 to 30 days. Past due 31 minus 120.
31 to 121.
All right.
To 120.
All right. 121 days. Past due 121 days again. 1 year.
To 1 year, yes.
Yeah, 1 year. No more than 1 year.
And then more than 1 year.
More than 1 year. 100%. 66.88% in advances loss rate. 0.62%. 0.31%. Explain to me.
So the question is?
Yeah, just give me an explanation on 1,588,000 current amount. You can explain to me on it allowance and impairment.
Go ahead, Alan.
Yes, no, yes, no.
So, Mr. Young, what this is note is explaining is how we calculate the provision that we have against our trade receivables. So we have outstanding at the end of the year 2.6 billion of receivables. That's money that people owe us for services we provided. IFRS requires that when we make a sale, we need to take an estimate of what is the likelihood of individuals not paying us, because it does happen. And we take, for each of these aging categories, 0 to 30, 31 to 120, more than 1 year, for example, we apply a certain percentage to that category in calculating our provision against bad debts. And that's what that is showing. So we have a provision at the end of the year of 110 million, which is substantially lower than it was in the prior year. I'd like to just note that, because I think that the team did a very good job of bringing that down between 2020 and 2021. And the 0.31% means that for the receivables that are not yet due, as at the 31st of December, which totaled nearly 1.6 billion, 0.3% of those receivables we are carrying a provision for in case they do not pay.
Mr. Chairman, you have good customers, you know. But you see me, if me give you 120 days for bring up my money. I don't think me should we are going business up and down, but I don't think me should go over this length of time to get my money because it's a business. So I have to take business serious. And business is time and money. You understand? So some people just add paying. I don't give you 120 days. We need to collect our money. You
So you're saying that we shouldn't have anything past the 120 days?
No, you have good, you have good customer. Don't get me wrong.
Yeah,
you have
yes.
good customer. And you can't too rush them sometimes. You have to give them time. But some of them have the money come like a vice grip tight.
I know,
You
Mr.
have to
Young,
use something
so-
spanner and pull them to get
Yes,
for-
yes,
and
yes.
for rust
So
up.
maybe we need to hire you for that.
Yeah, completely concur.
Okay.
Good morning, all. Christopher Borough.
Mr. Borough, welcome, sir. Good to
Thank
see
you very much. A few years ago, I think in the same location, we had discussed, how should I say, imprinting Kingston Wharves on the area around it, just like how Digicel did the parking halfway tree. My last trip to the area, I haven't seen anything done. I would love to see us have it that once you turn off Marcus Garvey Drive, you should know the territory you are in. Please, let us go forward with that one.
I agree with you 100%, sir.
Okay. My other one, question
Comment.
here. Are we expanding in the St. Catherine area that we don't know about? I noticed a lovely structure on Old Harbour Road has improved that area quite well. And I'm just wondering, is it a sign of things to come?
So specifically, what are you referring to, sir?
How should I put it? Almost opposite the Muslim institution, there's a house branded by JP. And I said, if you went to this much trouble, it can't be just somebody living there. You must have greater intentions in the area.
Simone? No?
Yes, our core areas of development in terms of capital investment at this time are, as you mentioned, in Kingston Wharves, in Newport West, broadly defined, and in St. Mary, broadly defined. We also have offices, our bakery and our ripening centers are in Crossroads in the Terminal Road area. That's where our capital is being deployed.
Yeah, but we're talking about Old Harbour Road
He
now.
said St. Catherine and Old Harbour
Geographically
Road.
speaking.
I'm saying that we're not, we will look at it, we'll take your advice,
No,
but
no,
we don't have
you
an
said-
investment there now.
As I understand, Mr. Borough, you're saying we have a sign up there?
There's a lovely house that's been put there,
Yes.
etc.
and it
And
says-
I take it it's a sign of possible things to come.
It says
I'm just
JP on
curious.
it?
I have seen JP sign around the place, yes.
Okay? It's advertising. But it's not a capital investment.
Okay. No, well, I just thought maybe could it have been part of the original logistics hub argument?
No, no.
Who knows?
Okay.
All right, thank you.
All right, those are my two. And as I say, let's brand the Kingston Wharves area, please.
Thank you
Sir,
very
if I can just make a comment about that. That's something that we, as our chairman mentioned, we share your view on. And not just Kingston Wharves, but all of the vast majority of the occupants of Newport West have expressed a desire to invest in that space. And obviously, for the fundamental investments that are required, things like drainage and roadworks and parking rules, et cetera, we need to cooperate with the government. And so we have reached out and want to see that happen, and we will continue to work on it. But I think you also need to insist on action from the government as well, and I believe that's quite possible.
Well, from what we've heard about housing in Kingston recently, we know how long that takes and difficulty involved. One other thing.
We'll do our part.
Okay, understood. Some years ago, somebody asked me to go pick up somebody at Kingston Wharves. Granted, it was Christmas time, but one of the things that troubled me about that place, customers and security using the same restroom. Somebody missed on that one. That is a no-no. Please, rework, re-engineer that for me.
The CEO of Kingston Wolves is here, sir, and I'm sure he's listening to your comments.
Thank you very much.
Pleasant good morning. Lanzel Bloomfield is the name. Mr. Chairman, I'm very grateful that I have only one question. I am very grateful that we are here today. I have not attended a meeting for over 2 years. So I'm very grateful that we are here to, as shareholders, to view the performance of the company, which you are doing quite well, and I thank you all. Mr. Chair, in relation to the new variety of banana known as Fia, there have been many complaints by farmers recently in the media that many banana chips companies are not purchasing this variety of banana for making chips. What is the situation with this company in using this banana?
So our bananas that we grow here are not the Fia variety. So we grow conventional Cavendish bananas and have always done so in recent times and will continue to do so. A number of farmers in Jamaica elected to grow different varieties which have the benefit of reducing some pest control costs, specifically related to Sigatoka. But on the other hand, they have slightly different eating properties, meaning they're more starchy. And really, we believe don't meet the customer expectations, certainly not for ripe bananas. So our business is not really focused on Fia, and our business is very focused on the customer experience with the fruit, making sure that it is high quality, healthy, tasty. So we didn't go that route, and we don't plan to. As far as the other farmers, I do think that their business model was centered around green bananas as a starch, and we compete in that space as well, and we're also proud of what we're doing in that space.
All right, thank you very much.
All the sprayer is no longer there with us.
Hello, good morning, everybody. Al Edwards from Arrow Today. This is a question for you, Jeff. Jeff, you mentioned that drink, which seemed to me a really good bestseller, the vitamin C drink with the ginger. I could do with one about now. Can you get that in Jamaica? And if not, when can we get that in Jamaica?
For the chair. The products that we make are considered globally premium products, even though they definitely have everyday purchases by consumers. So the products that we make are fresh, for the most part. They're all fresh, but they have a relatively short shelf life, an 8-day shelf life for the most part. And those products typically exist in markets that have a very highly developed cold chain, where the supermarkets have refrigerated distribution systems, refrigerated trucks, good refrigeration supermarkets. And so they typically exist in very high GDP countries with very well-invested food chains. Now, I believe that this will ultimately have a place all over the world, and that's our view, but it takes time, it takes development. What we're doing, and I think I've mentioned to other AGMs in the past, is looking at other technologies that can extend the shelf life of the fresh juices. They still have to maintain the cold chain. Most of what you get in juices here in the Caribbean, in Jamaica in particular, is pasteurized. And a consequence of pasteurization, which is essentially boiling the juice, because you raise the temperature, obviously it kills the bacteria, but it also kills the taste, and it kills the nutritional properties to some extent. There are a few people at the margins doing small things in small places, but in terms of the big bulk business. So what we've said is, how can we kill the bacteria, which is what pasteurization does, without raising the temperature of the juice. And that's obviously high science, and there's two ways to do it. One way is to zap it with an electrical shock as it goes through a pipe at cold temperatures. And we've invested in that technology in Europe, and that allows us to move from an 8-day shelf life to a 21-day shelf life. The other process is to apply vast amounts of pressure on the juice, the same amount that you'd have if you were at the bottom of the deepest point of the Atlantic Ocean. And that kills the bacteria at cold temperatures and doesn't destroy the taste or the nutrition. And we've invested in that technology as well. At some point, that can make it to the Caribbean, we believe, but it's very, very high-end technology. But I think it will make it. I would say 5 to 10 years.
As long as that?
Sooner than that.
Second question. This question is aimed at you, Chairman. I think your insight would be very much apropos here. If you look across the Caribbean, food importation bill is about $6 billion. Jamaica, what, 1.4, 1.5 of that? It's extremely high. Given the times we live in now and the importance of food security, and JP's shown a lot of ability here, would JP be amenable to probably getting into a national discussion as to food security in Jamaica? And what recommendations, given your experience, would you put on the table in that regard?
Well, I'm going to let Jeffrey answer most of that question, but we are in that discussion with the government already. Private sector organization and government people had that discussion. But JP is growing bananas, is growing plantains, pineapples, and coconuts. So, you know, we are already in that space, and we already, I think, are the largest in 2 of those food items. So we are doing our part, and we'll grow more if there's more demand.
Yeah, I mean, while the discussion takes place, we're busy growing bananas and pineapples and plantain.
So
the discussion is important, don't get me wrong.
But our name is producers, and we produce.
Yeah. So we're not stopping, but it's, I mean, I don't really want to take over the meeting with public policy issues, but it's really important for everybody to understand that both at the micro level of Jamaica producers, we have a diverse business. So we're in the logistics business as well. And one of the things that people need to understand is that, you know, I have a trade deficit with, pick your supermarket chain in Jamaica, Progressive, High-Low, Megamart. So they give me more goods than I give back to them. So we're obsessed with this import bill in Jamaica, which is 800 million, or you said 1.4 in food. But it really wouldn't make sense to me to quit my job and go and grow my own fresh fruits. I can avoid going to the supermarket. What I need to do is sell services as well, which can be high value. And so both as a country and as a company, we believe in ensuring that we have this diversity. So Jamaica does have very strong potential, in our view, to grow the services sectors. And so we have to be very careful if we think that the solution to food security is to protect our borders. Obviously, with the exception of phytosanitary rules, but to protect our borders using tariffs and taxes as the only tool. So, because we are in the logistics business as well. But the short answer is our role is to continue to grow fresh produce in Jamaica and supply it to the market. But we want to make sure that Jamaica does continue to trade in and out.
Mr. Staple, you ready to come back?
Sure. Turn me to page 91. What accounted for the value in use of goodwill being identified to be lower than the carrying amount, resulting in an impairment of $38.9 million, which has impacted our expenses and our net profit? Your comments.
Alan?
So,
Are you with me on page 91, sir?
yeah.
Yes, sir. Yes, we are.
So we got it, Mr. Staples. So this, firstly, I should say this is an adjustment from 2020, not from 2021. But just to give the background, during 2020, obviously, the businesses were unsettled by COVID. And just like with all of our assets, you have to do a review. But particularly with intangible assets, you have to do a review of recoverability. And there were a couple of assets that, due to the downturn in revenues or markets or the changes in the markets of COVID, we chose to impair in accordance with IFRS. So we booked those adjustments in 2020.
So am I to understand that for 2022, you will not have an adjustment like that happening again?
Not just 22. Well, we're only halfway through 2022, but so far, no. But for 2021, which is the matter in hand, we had no adjustments either. So this is from 2020.
And am I to further understand that because there will be no further impairment, that shareholders will be able to receive a bigger dividend share this year?
The correlation is not there, sir.
Mr. Chair.
Yes, sir.
Page C31, note 14.
C31.
C31, note 14. Is this term loan of 1.3 billion entered into on March 30th, 2020 of fixed interest rate or variable? And what is this loan being used for?
So this loan was originally entered into, firstly, I should say this loan is a fixed rate loan and is fixed until 2027. So I recognize interest rates is a hot topic, but in relation to this, we're in a good position because we're fixed.
Am I to understand that this loan will not, the interest rate will not change between now and 2027?
Exactly.
It will remain as is.
It will remain as it is at 5.35%.
What is it used for?
So this loan was actually refinanced in March 2020. The loan actually was originally taken out in part to finance JP's acquisition of shares in Kingston Wharves in 2014.
And Mr. Staple, just so you know, we refinanced it in 2020 precisely because we wanted to make sure that the company had, it was right after kind of COVID hit hard. We wanted to make sure we had long-term secure financing in relation to our largest loans, and we did, and we do. That's why we did the refinancing.
Okay. So you're looking forward in the future, and that's why this loan was taken out, basically. Mr. Chair, turn with me to page C36. C36.
With you.
The company, as at the 31st of December 2021, had one trade receivable for which credit impairment was 100% provided for. Which company is this? Your comments.
One trade risk. Yes. I don't know which one.
Yeah, Chair. I do not have one because so Jamaica Producers Group, which is the company, I should put it, as Jeffrey said earlier, is a holding company. The subsidiaries do all the trading. So JPG has very few trade receivables. But what we do have is a few legacy assets, trade receivables relating to some land holdings, or the rent relating to land holdings. And this is what this relates to. We are owed some money by a former tenant of the land who we are collecting. In fact, actually, I think it was in 2021 we collected about half of the amount. And we still have the remainder to collect, but in accordance with IFRS, we provided for the balance.
Am I to understand that this company, which you have not told me who it is yet, this company still owes us money, which we have made a provision for?
Indeed.
And we are not able to collect basically from this company.
Let me just say, Mr. Staple, because it's something that we do pay attention to, and I'm glad you raised it. That company, the specifics relate.
What's the name of that company?
I'm not going to do that here, Mr. Staple, but let me just do the context. It relates to land in St. Thomas that was being used for agricultural purposes. And the agricultural environment around that company changed significantly. What I think the shareholders can know is that we now have an occupant on the land. And by the way, this is pretty substantial land. You know, it's a 600-acre piece of land. But the land is being now occupied, new occupant, and it is in good standing. And as Mr. Buckland mentioned, we did receive payments on that.
So what is being done with this land now? What is being done on this land?
The current user, actually, the tenant is now the government of Jamaica through one of its enterprises.
And lastly, Mr. Chair, C32. Explain this significant increase in staff costs from 223.7 million in 2020 to 258 million in 2021, which is 34.9 million or 15.6%. Your comments.
Okay. Alan?
Essentially, there's three components to this. Remember, this is the staff cost for the holding company, not for the group. But essentially, three things happened. Firstly, obviously in 2020, where COVID hit, and variable bonuses were pretty much non-existent. So 2021, the performance of the business has improved, and so there's an element of bonus that wasn't there before. There's also an inflationary salary adjustment that was not issued in 2020 when staff freeze their pay. And finally, there are, you've seen from the presentation we're growing, and there are actually new heads involved in that. We've recruited and we have more people at the corporate office this year than we had, or in 2021 than we had in 2020.
You're saying, Mr. CFO,
Yes?
you're saying that because of COVID, these adjustments had to be made.
I'm saying actually the largest part is investment in new people. By far the largest increase between the 2 years is having more people at the corporate office.
So what about us as shareholders?
Let me just say it. I figured you were going there, Mr. Staple, because we've been doing this a long time. The variable proportion that Mr. Buckland mentioned as his first point is related to the profit that shareholders get. So the compensation will go up a little bit when the profits go up a little bit and the dividends go up a little bit. I mentioned at the beginning of the presentation, Mr. Staple, that dividends went up 25% year on year. But you will notice that the increase in staff costs that you just described was less than 25%.
15%.
And lastly, Mr. Chair,
Lastly?
last one. Page 64. Retained earnings as at the 31st of December was 13.3 billion, with subsidiary companies contributing 10.9 billion. Why then did shareholders only receive such small amounts of dividend payments?
Jeffrey just pointed out that the dividend increased 25%, sir.
No, forget the numbers. I don't believe in these percentages.
But you were the man that raised 15% for the staff a while ago, so you believe in percentages. So, but seriously, Mr. Staple, the dividends are increasing. Maybe not as fast as you would like, maybe not as fast as other people would like, but they are increasing. And we are, as directors and shareholders, we are all interested in more dividends.
I am not saying...
But we're going to do it in a steady way, especially in today's world. We are doing it in a very steady way.
I am not saying that you are not getting dividends, Mr. Chair.
No, I said more dividends. You're getting dividends, but you're getting more dividends.
Okay. What I'm looking forward to
Yes.
is in the future that our dividend increases will be reasonable.
Will be more than what they are now.
What they are.
Okay.
Thank you very much, sir.
Thank you, sir.
Not your time.
You're back again, Mr. Livingston, Young.
Yeah. Mr. Chairman, I have two friends.
Only two?
Yeah, two. Business friends.
Okay.
One in St. Thomas and one in Portland. No. Them have nearly about 500, we just speculate. Them have about 500 thing of land.
500 acres of
Yeah,
land?
yeah,
They're
look
big-
more.
They're big landowners.
You're right.
Yes.
No. Them grow, there is some red dirt. Red dirt, the orange them greener. But I'm on the mountainside, like mountain, Blue Mountains. So they go from top to bottom. So each row, you have one row.
The terrace?
Right, yeah.
Yeah, yeah.
And you ask a question. All right, in Europe, which one you prefer? Although Europe is a bigger place still, more than Jamaica. Which one you prefer? Either Europe or Jamaica in orange and all thing. Explain a little bit.
In orange?
Yeah, in orange.
Europe does not grow oranges other than Spain.
Netherlands.
Spain, Greece, but Netherlands doesn't grow.
Which one of them?
What we do is we import the oranges from there all over the world into the Netherlands, and then we squeeze those oranges and make juice.
All right. All right, like how you say, the Jamaican dollar can keep on declining. You know, think it wise for support my friend them. See if you can forget the drive on the Jamaican dollar for go up. That's when you can use some US dollars and do it. You don't think it wise enough for you say, boy, that support them in the oranging.
No, let me say something to you. Our juice business started in a way on the back of Jamaican citrus. But we are now competing with citrus from all over the world. So for the factory in the Netherlands to be efficient and to be able to sell in the market, it has to buy low-cost citrus and the most efficient methods that we can use. Right now in Jamaica, nobody grows citrus other than maybe one or two people, and the cost is high. So we cannot use that citrus in our plant in Holland.
You see them the place where I live? It's near side of Blue Mountain, and place like Hole. It's when you wake up a man time.
So you better grow Artenique up there.
No, it's all of them sitting there. All of the Artenique, all of them, they name it. They are Portland and
No, but I'm telling you, you better grow Artenique up there.
Well, anyway, Artenique is very sweet. Then go to Jamaica. Anyway, 30 page, 100. This is US and Jamaican. Current interest rate, fair value. 2021 and 2020. All right, US, we'll jump to US first. 5% in secured loan. Others, boy, I told them JMD, Jamaican Euro and US. And others, let me go by the percentage. 5%, 8%. nil, me no for 3.50%.
Those percentages are the interest rates on those particular loans. So.
Explain to me, on others related party, US, of 3.00%.
Yes.
Of what? 1,809,970,000 and 2021 alone in others related party in US.
0%. Explain that one, particular one.
Yeah.
Mr. Young, you'll note that note 4 on that page, at the bottom of the page, explains that loan. So that loan of 188 million Jamaican is due to our partners in the snacks business who hold 30% of their equity in the snacks business, and we have both loans and equity investments in parity between JP and our partners. And that loan expires in 2025 and has an interest rate of 3%.
Jump down to IV. 5% in Kingston Wharves, fixed rate. Explain a little bit on that for me now.
So this was a new loan that Kingston Wharves took out during the year, in part to fund its capital expansion. You saw the cranes and the berth developments that we've been doing.
Like Mr. Hall.
Yeah, that Mr. Hall has explained. So this was a new loan that was taken out, repayable over 5 years, and the interest rate is fixed again, the point made earlier, at 5.5%.
And in today's world, so when you look at that, these rates are very good. Excellent.
I have a next question for you. Hold on, let me see if I find it.
Final one now, Mr. Young.
One more.
Final one.
Yeah, final one. I look see me find it. Yeah, give me a little time. Because that one is very important. I have to see me find it, man. Because I see it and it just slip me as I come. Just give me a little time. I won't keep up with time. It starts with C12. Let me see if I can find it. Very, Tio. I find him.
Yes.
C12. Jump there for me, please.
C12.
Yeah, all right. Shares. Capital fair value. Reinvestment total. You there, Mr. Chairman? Ready?
Yes, go ahead.
Yeah. As the balance as December 31st, 2019.
Correct.
Total income achievement, income for 2020. Profit for the year, of 471,955,000, sorry. All right. Others, income achievement. You can give an explanation, please.
Well, first if you're talking about retained profits, which is 471,955.
Yeah.
And then you're coming down
Profit for the year. And income achievement 2020. The dash on each one of them.
And then you understand the question.
Well, I'm not sure I follow your question, Mr.
Profit
Young.
for the year first.
But profit for the...
And others.
But just to be clear, this statement reconciles the movement in the equity of the shareholders, all of us here, between 2 years. And it has the prior year as a comparative. So the first part of the table reconciles the movement between December 2019 and December 2020, and then the second half 2020-21. And obviously the profit is the largest component of the change in the equity of the business, but remember this is for the company, not the group. So this is just the holding company, and in 2020, the company recognized gains, profits of 472 million. That is the holding company. And the final, and then it carries on down the rest of the page. Does that answer your question, Mr. Young?
Yeah, jump down the corner, others. It's a team that will not classify to profit or losses. Description of investment at fair value through others. Dash of 7 million.
Depreciation and investments.
So this item, Mr. Young, is certain investments held by the company are go through the other comprehensive income rather than profit. These are sort of not core trading items, I guess, for want of a better phrase. And that an adjustment, either an increase, an appreciation or depreciation of those investments, goes to this fair value reserve.
Fair value, yeah.
And I mean, it's obviously
It's a very technical,
$1 million
technical point you raised here, Mr. Young. But can I suggest that after the meeting you sit down with Alan and let him give you a little more detailed explanation?
Yeah. What made up this others of income?
That's what I'm suggesting, sir, that after the meeting you sit down with him and get that full explanation. Thank you very much. At this time, we have some questions that were mailed in, and I'm going to ask Simone to read these out for us.
Thank you, Chairman. We received some questions from our shareholder, David Rose, and he sent an additional few this morning before our cutoff time of 10:30. So I think we can run through these efficiently. JP Snacks Caribbean incurred a $19.86 million loss in Q1, of which $5.96 million was attributable to the Wisynco Group. This subsidiary has been hit hard since the pandemic and is still reeling. What's the plan to improve operations as the economy is reopened?
Thank you, Simone, through the chair. I think some of those numbers may be coming from a different report, because the way we account for it is slightly different than the way that, let's say, Wisynco accounts for it, with our numbers showing a slightly different treatment of amortization and of intangibles, and therefore showing a better result. But suffice to say that that business was affected in 2021 by kids being out of school, by commuters being not on the road as much, by challenges with distribution. The good news is it's up this year. It also was affected by continued increases in commodity prices. And of course, we're repricing. So I'm expecting a stronger and better performance for that business in 2022.
Thank you. Through you, Chairman. The second question. Your bourbon cake is delicious, if I say so myself. However, Tortuga Caribbean, like any other food business with heavy exposure to tourism, while the recovery has been swift for our Jamaica rival numbers, what's the story on the recovery and expansion of Tortuga?
So I referred earlier to 3 key elements. Element 1 is making sure that Tortuga finds its way to other tourism destinations outside of the Caribbean through innovation. Number 2 is making sure that we expand Tortuga in the Caribbean and we reassert the brand in the Caribbean. And number 3 is that we're making investments at point of sale experiences at arrival destinations and departure destinations such as airports in the Caribbean. And we believe that will give a good result for Tortuga. And frankly, in Q1 and year to date, the performance is very positive.
Thank you. While the group has consolidated cash of $973 million plus $9.88 billion in repos, not all of that cash is attributable or accessible by JP, the company. An example is KW, where dividends equals cash flow that can be used by the parent. With rising interest rates, does JP have available credit lines at its disposal to capitalize on potential opportunities? What's the parent's position in terms of capital on hand and pipeline ahead?
JP has access to financing, and although David Rose is correct that a significant share of our cash resources are at Kingston Wharves level, that's matched by Kingston Wharves also being the subsidiary with the greatest investment or share of the investment program. So we're comfortable with that.
Okay. Thank you. Question 4. How has Grupo Frontera been performing and what's the outlook?
It's been performing in line with expectations and outlook continues to be positive. And again, we definitely remain committed to securing the opportunities that exist in the largest consumer market in the Caribbean, being that of the Dominican Republic. And we see that being expressed through Grupo Alaska, which, as I said, is performing in line with expectations, but also in our snack business and our frozen food business as well.
Okay. Question 5. The pound has effectively crashed against the USD, JMD, and other major currencies. Does JP employ hedging instruments to mitigate against this wide-ranging fluctuation in FX movements?
The largest, our largest hedge is a natural hedge. JP has, in terms of its revenue base, has revenues in sterling, as was mentioned. It has revenues in euros through our juice business in Europe, and it has revenues in dollars through Tortuga, through Kingston Wharves, etc. Those are by far the largest 3 currencies of our revenue base, with very little of our revenues being narrowly linked to the Jamaican dollar. And so we feel that natural hedge covers us. But as was mentioned in relation to the prior question, we also hold cash resources in hard currencies, including in the US dollar.
Okay, thank you. Question 6. How is inflation affecting the wider JP group, especially with rising oil and fertilizer prices?
Inflation through fertilizer prices will affect us. We'll have to pass on some of that to customers. And that said, the banana business, which of course is where fertilizers are most directly expressed, fertilizers are used all over the business in our food sector. The performance in Q1 is better than in prior year. Inflation generally, we have to address it through innovation, through efficiencies, and we're doing that through cost control. we're very fortunate to also be diversified. So I would say that some parts of our business are able to offer services that are in high demand in the current environment, including in logistics. And that's been attractive for us as well, and you'll see that in our earnings.
Thank you. Question 7. What is the investment program like to build out capabilities for JP's food and snack division? Is there a capital expenditure outlay?
There is a capital expenditure outlay. We're expanding our processing capabilities, our bagging capabilities in snacks at this time.
Okay. Does JP publish its JSE Corporate Governance Index score?
Through the chair, I would refer that to you, Simone.
We do publish our CGI score every year, and I'm pleased to say that for the last 3 years, we've maintained a grade A. Question 9. You acquired a 50% stake in Co-Beverage, and you already have AL Hogestegger in Holland. What synergies have you been able to explore between these subsidiaries in the fresh juice market?
The primary synergy so far has been know-how and expertise. We operate at the highest level of know-how in the fresh juice business globally, and we've been sharing that with Co-Beverage, both at the level of processing but also procurement.
Thank you. Next question. What additional emerging risks have appeared for your European operations since the Russia-Ukraine war?
Our volumes are still strong. The employment levels are relatively strong still in Europe, and so the business is performing well, notwithstanding the Ukraine war at the level of volumes and overall financial performance. From an outlook perspective, we have a concern about commodity price increases, and we have a concern about inflation relative to wage increases. But I would say that we're watching it closely, and we're preparing ourselves to deal with it.
Your Geese joint venture has paid off quite well for you and your team. You also did an acquisition of Miami Freight and Shipping Company in Q1. This begs the question of what direction does the JP Group see itself in shipping and logistics going forward?
That's consistent with the presentation before this.
Is there a target capital expenditure program in line for JP Food and Drink in 2022? Sorry, 2022.
It would be in line with the capital expenditures in prior years.
Okay. Would JP consider aligning more its expansion to the Americas amid the rising threats in the Eastern Hemisphere?
Yes.
In the Americas, yeah. Are there any new Tortuga or JP Snacks products on stream for 2022, which will fit with the recovery of the tourism and Jamaican economy?
This feels like school's challenge. Anybody getting the school's challenge feeling? Johnny Crunchers. Watch out for that one. It's going to be big.
Okay. And we have 2 left. Does JP see other ways of using more local inputs in growing its snack division as you did with the Tostones?
The local content is likely to be focused in our fresh food business.
Thank you. Where have you seen the greatest exposure so far in 2022 with respect to inflation?
Greatest impact. On the positive side, we're seeing it in logistics. On the challenging side, we're seeing it in our Caribbean food businesses. We've been able to come to agreements everywhere, but to a greater extent in our European businesses.
Thank you, Simone. Ladies and gentlemen, I thank you for your comments, your observations, and suggestions. I'd like now to proceed to the consideration of the resolutions before us. The accounts and reports of the directors and auditors have been circulated previously to all members, and Mr. Nigel Chambers of KPMG has read the auditor's report. I now ask that the director's report, which may be found on page 28 to 29 of the annual report, be taken as read. And thank you for agreeing to that. I now ask our secretary to read the first resolution before the meeting.
Ordinary Resolution Number 1, that the directors' report, auditors' reports, and audited financial statements of the company and the group for the year ended December 31st, 2021 be and are hereby adopted.
Can I have somebody to propose this? Mrs. Marsh proposes. Mr. Staples seconds. All in favor? Aye. Anybody against? The ayes have it. Simone, can you read the second resolution?
Ordinary Resolution Number 2, that the remuneration of the auditors KPMG having been fixed by the directors for 2021 be and is hereby approved.
Proposer, Mr. Young and Mr. Staples seconds. All in favor? Anybody against? The ayes have it. The third resolution before the meeting.
Ordinary Resolution Number 3, that the interim capital distribution of 25 cents per stock unit of record date December 20th, 2021 be and is hereby ratified and declared final for 2021.
May I have a proposer? Mr. Burrow, seconds. Sorry? Okay, did you get the name?
I didn't get your name, sorry.
Marcia Nichols. All in favor of this resolution? Any against? You're against this? No, so you're against, you vote against it, so but you're in the majority. Minority. So we're going to carry the resolution.
I just saying something. See the next dividends payment.
Yes.
You don't need an increase of dividends and a quarterly dividends. The reason why we say that, suppose you buy shares in another company. That's what I mean now. And I'm going to pay you. Just something I said to you. I'm going to pay you 3% or 4%. See, you have a quarrel and say, boy, you need an increase. That's why I'm confident to say we need an increase of dividends and a quarterly dividends.
Thank you very much. The ayes have it on that resolution. Next resolution, Simone.
Ordinary Resolution Number 4, that the auditors KPMG, having indicated their willingness to continue in office, be and are hereby reappointed for the year 2023.
I'd like somebody to move. Mr. Staple moves. Mrs. Johnston, Lisa Johnston seconds. All in favor?
Aye.
Anybody against? Ayes have it. Resolution number 5. The directors return from office by rotation pursuant to Articles 78 to 80 of the Company's Articles of Incorporation are Professor Alvin Wint and Mrs. Sanya Goff. Both of the retiring directors, being eligible, offer themselves for re-election. Simone?
That Professor Alvin Wint, who retires by rotation, be and is hereby re-elected a director of the company.
Somebody like to move? Mrs. Delia Kelly. Second, Mr. Burrow. All in favor?
Aye.
Anybody against? Ayes have it. Simone?
That Mrs. Sanya Goff, who retires by rotation, be and is hereby re-elected a director of the company.
Mrs. Kathy Moss, seconded by Mrs. Kelly. All in favor?
Aye.
Anybody against Mrs. Goff? Ayes have it. I now ask the Secretary to read the 6th resolution before the meeting.
Ordinary Resolution Number 6, that the amount of $13,270,000 shown in the accounts for the year ended December 31st, 2021 for non-executive directors' fees be and is hereby approved.
Somebody like to move for that? Mr. Burrow moves. Seconded by Ms. Nichols. Thank you. All in favor? Aye. Anybody against that? Nobody's against. Thank you very much. The ayes have it. So I'd like everybody to bear with me a little bit on this one. And I know it's been a long meeting, but we now proceed with the special business of the meeting, the amendment of the Articles of the Incorporation of the company. Ladies and gentlemen, you'll remember last year, due to the health risks of the COVID-19 pandemic, we sought and we were granted the court's permission to host our meeting virtually. We are pleased to inform you that since our last meeting, the Companies Act of Jamaica was amended to allow public companies to conduct hybrid or virtual members' meetings. While our preference is to hold physical meetings of the company, and I want to emphasize that, our preference is to hold physical meetings of the company. We appreciate from the COVID pandemic that there are situations which may require us, and we hope they won't come, but may require us to exercise flexibility in respect of the format of the meeting. So we would always prefer to have a face-to-face meeting, but there may come a time, and therefore we're making the steps for when those times, if they happen. So the company proposes to amend the definition of, at Resolution 7A, the company proposes to amend the definition of electronic means to include some of the more up-to-date methods of electronic communication. And at Resolution 7B, the company seeks to insert a new article, 49A, which will permit the company to hold virtual and hybrid meetings and defines the format of such meetings. At Resolution 7C, the company seeks to amend Article 50, which relates to the provision of notice of an annual general meeting of the company, to include the requirement that the company specify in that notice the format of such meeting, that it is whether it is a physical meeting, a virtual meeting, or a hybrid meeting. So anytime you get that notice, you will know what kind of meeting we're planning to have. And the notice will have that, and we need to amend the articles to do that. I now ask the Secretary to read the 7th resolution of the meeting.
Special Resolution 7A, and members, in the interest of time, I'm going to read the resolution once and indicate the sections that we're proposing to insert. Electronic means any method of dispatch or communication of sounds, documents, maps, photography, graphs, plans, or other data which involves the use of equipment or technology having electrical, digital, magnetic, wireless, optical, electromagnetic, photographic, or similar capabilities, including, but not limited to facsimile machines, the internet, and the words we're proposing to insert are webcasting, teleconferencing, video conferencing, live stream or broadcast. That's the end of the proposed insertion. And mail sent via computers and scanning devices.
So, may I now have a proposer for that?
Yeah, Livingston. You have a problem.
You have a problem?
Yeah.
Well, you're not proposing it then, sir?
Yeah, I'm proposing. Hear me out, look at it now.
Sorry? You're going to propose it?
Yeah.
Okay.
I think you see, Mr. Chairman, it's wise enough to keep 10 shareholders at the meeting and the rest online. Or virtual, whatever you want to call it, online.
Thank you for your input, sir. But as I told you, there may come a time when we will have to have a virtual meeting.
Yeah, all right.
And in that case, we will call the virtual meeting. That's why we're having this proposal.
All right, Mr. Chairman.
Yes.
You ever have, all right, me know say you do it still, a food angler's permit.
I used to have a food angler. Yes, I used to have one.
Some of the questions have more than one answer. See, it's like when you see my hands say so, you can't see the back of my hand. When you ask about even all the rest of the questions, you have something you on the phone, and you do the virtual. You can't get to other people there. You can't, and you keep up your time. Sometimes you have to leave it on the bother with the meeting.
Mr. Young, I started out by saying, we always want to have a face-to-face meeting. That's number one.
I say nothing against
Good.
that. Yeah.
2, there may come a time when we have to have a virtual meeting.
Mr. Chairman, now get to me saying that. You not get to me saying that, Mr. Chairman. I'm not against that, but I say, suppose you're on the phone, right? You can't get through on the virtual meeting. And other people are keep up your time and talk so much, you can't even get to say anything.
We have to find a way to fix that. Like right now, I want you to stop so we can go on with the next thing. So if you're in a virtual, meeting now, what would I do with you?
Let me just say something. Invite 10. You can invite 10 and the rest.
Thank you, sir. May I now have a proposal for the resolution? Mr. Burrow, and that gentleman over there? Mr. Hubert Foster. Thank you, Mr. Foster. All in favor? Aye. Any against?
Yes.
One, Mr. Young is against. The ayes have it. Simone, please read the second resolution.
Sure. Resolution 7B. There shall be inserted a new Article 49A of the Articles of Incorporation of the company, which shall provide as follows. hybrid and virtual meetings. 49A1. To the extent permitted by law, the company may, in lieu of holding a physical meeting, convene and hold a meeting of its members as A, hybrid meeting, or B, virtual meeting. And a hybrid meeting or virtual meeting shall be identified as such in the notice convening such meeting. Paragraph 2. For the purpose hereof, A, hybrid meeting means a meeting held simultaneously by electronic means as well as at a physical venue in which attendees, whether by electronic means or present in person, simultaneously attend and participate in the proceedings of the meeting in real time. B, a virtual meeting means a meeting in which the attendees participate from numerous physical locations, whether inside or outside of Jamaica, through the facility of the internet or intranet, by the use of integrated audio and chat, video, and messaging tools and application sharing software by electronic means. And C, a physical meeting means a meeting in which all attendees, A, are physically present together in one location, and B, participate in the business of the meeting and interact with each other face to face. Paragraph 3. Notwithstanding anything to the contrary in these articles, the notice of a virtual meeting need not specify a place as a physical location, but shall include an electronic or virtual location or details sufficient to facilitate the attendance by members at an electronic or virtual location, and such a meeting shall be recorded as held in Jamaica. The notice of a hybrid meeting shall specify a physical location and an electronic or virtual location. Paragraph 4. If the company holds a hybrid meeting, it shall have the power to limit the number of persons in attendance at any physical venue to such number as is reasonable in all circumstances. Paragraph 5. Where the company holds a hybrid meeting or a virtual meeting, the use of electronic means for the purpose of enabling members to attend such meetings may be made subject only to such requirements and restrictions as are A, necessary to ensure the identification of the members of the company and the security of the electronic communication, and B, necessary to provide reasonable evidence of the entitlement of any person who is not a member to attend such meeting. Paragraph 6. A member who attends a hybrid meeting or virtual meeting by electronic means shall vote by proxy or by such alternative means, including the use of electronic voting as may otherwise be determined by the company. Notwithstanding anything to the contrary contained in these articles, a proxy form may be returned to the company by any electronic means prescribed by the company, and this shall be deemed as deposited at the registered office of the company and valid, provided that the company is able to identify that the proxy has been duly stamped in accordance with the applicable law. 7. A member who participates in a general meeting, which is either a hybrid meeting or a virtual meeting, is deemed to be present at the general meeting and shall count to constitute a quorum. Any hybrid meeting or virtual meeting is deemed to have been convened and held in Jamaica and shall be governed by the laws of Jamaica. Paragraph 8. Any failure of technology or any failure or inability of a member to attend or remain in a meeting held in accordance with these articles as a result of a mistake or of events beyond the control of the company shall not constitute a defect in the calling of such a meeting and shall not invalidate any resolutions passed or proceedings taking place at that meeting, provided that a quorum is present at all times.
This time I'd like to now ask if we have a proposer for this resolution. Mrs. Pat Francis, seconded by Mrs. Nichols. All in favor?
Aye.
Any against? The ayes have it. Finally, final resolution.
Resolution 7C. And Chair, I'm proposing to do the same thing I did before, which is to read the amendment, the article once and just highlight the amended words.
Fine.
An annual general meeting and a meeting called for the passing of a special resolution shall be called by 21 days' notice in writing at the least, and a meeting of the company other than an annual general meeting or a meeting for the passing of a special resolution shall be called by 14 days' notice in writing at least. The notice shall be exclusive of the day on which it is served and or deemed to be served, and of the day for which it is given, and shall specify the place. And this is the proposed insertion, in parenthesis, whether it is a physical meeting, hybrid meeting, or virtual meeting, close brackets, end of proposed insertion. The day and the hour of the meeting, and in case of special business, the general nature of that business, and shall be given in a manner hereinafter mentioned, or in such manner, if any, as may be prescribed by the company in general meetings to such persons as are under the regulations of the company, entitled to receive such notices from the company.
Can I have a proposer for this? Mr. Livingston, I got you with me, sir. Thank you very much. And a seconder, Mr. Burrow. All in favor? Aye. Aye. Thank you very much, ladies and gentlemen. And this concludes the formal business of this annual meeting. I thank you for attending and for your continued confidence and support. At this time, I'd like to thank Mrs. Lisa Johnston and her team for the preparations of this event. And I'd also like to, on your behalf, express thanks again to our directors, to the management, and the entire team who all worked extremely hard for a very good year in challenging times. The company has made a full recovery from the pandemic and is steadily being placed in a stronger position. I now declare this meeting closed and thank you for... Sorry? Mr. Staples.
I would like to say many thanks to you, Mr. Chair, and your members for allowing us to have a face-to-face meeting this year. I hope this will continue, irrespective of what is happening, and that we will appreciate, or we continue to appreciate the fact that we can meet face-to-face at our meeting.
Fine. And let me just say to you that the allowing is not a function of us only allowing you. It's a function of what the government and also the pandemic allows. So, again, the meeting is now closed. Thank you very much.